Imagine you can be able to buy shares and become part owners of organizations that you admire. That is where the shares or stock market comes in. This year, we have seen a significant growth, especially in the Kenyan market, of some of the companies. Some of them have actually grown more than 10 times. So imagine you can actually be able to be part owner and benefit from the revenues of the companies that you like. So let's go to the basic. What is a share? A share is really a unit of ownership in a company. And the question is, how can I be able to buy this, or why does it even matter? The way you can be able to be part owner is actually going and buying that stock. So it's like the same way you start a business, you put in money, and then after you put in money, once you have traded, the bottom line or the profit becomes part of what you earn. That is exactly what shares are about. You own the company. As you own that company, you get dividends at the end of the year as a distribution of income. So shares are really units of ownership, and there are very many organizations that have listed in various exchanges. But let me just narrow it down to the Nairobi Securities Exchange. We have very many companies, over almost 60 companies listed in the Nairobi Securities Exchange in various sectors. Talk about banking, talk about insurance, talk about agriculture. All these are available for you to actually invest in. So what is then stopping you from investing in the stock market? Maybe you don't know where to start or even how that works. So let's take a step back. Yes, I want to invest in Safaricom, but how does this even operate? Or how do I even start? So there is a whole regulation framework of how you can access shares in the stock market. One, you open a CDS account through a stockbroker or an investment bank. So the investment banks are the ones who go to the market to buy those on your behalf. Then, after you buy the shares, they are held in an account. That is called a CDC account. That CDC account is like a virtual account. You can actually see the amount of shares that you have, and you can continue growing that. Then to wrap all this up, we have the regulator who actually approves the people who are operating in the market and also the shares that are going to be given in the market. So they act like the person who is overseeing everything that is going on in the market. So it is good to understand that framework because it helps you understand what is the process like. So let's go through a step-by-step process of how you can actually be able to invest. I talked about opening a CDS account. The way to open a CDS account is through a broker. Some of the brokers have automated the process completely, so you can actually be able to do that at the comfort of your phone. So there are very many of them. You can choose which one you want to work with. And when you go to the CMA website, you will be able to see who are the authorized brokers that you can trade with. So that takes me to the second level. I have talked about all the sectors that are there and all the companies that are listed. So the question is, how do I decide which stock to buy? That is where the magic is. You need to understand how do I make money if I invest in the stock market so that I can know which shares to buy. So how do you make money by investing in the stock market? Two things. One is by capital appreciation. So I want to buy a stock at 10 shillings and sell it when it gets to 50 shillings. Or that's one way. Number two is through dividends. So once a company has done very well, you are the shareholder. Once they have paid all the expenses, the money belongs to the shareholders. Since this money belongs to the shareholders, the question is, how is it distributed? When it is distributed, that is what you get. It's called a dividend. So some of us invest because you want to get the dividend. So those are the main two reasons that really, in terms of returns, that of how we make money in the stock market. So the question is, for me to determine which stock to buy, then I should be driven by these two reasons. So I need to look for a company that is undervalued, a company whose prospects are good, but the pricing is still low. Let's use Safaricom as an example. Maybe Safaricom, if you look at the prospect that it has, whatever it is doing in data, whatever it's doing in voice, whatever it's doing on M-Pesa, we expect it to continue growing. So if it's trading today at 28 shillings, maybe the prospects are that it's going to get 50 shillings. So for me as an investor, I look at the prospects and say, since I expect it to go to 50 shillings, so it is good for me to buy today and wait it on and sell when it goes up. So that is the way you determine. So you look at the fundamentals of the company, look at what is happening within the management, look at what the business environment portends for them, and then ask yourself what is the right pricing. You maybe as a retail client, you might not be able to do all this analysis. So what happens is there are very many brokers and very many market analysts that gives you the prospect. So maybe just to subscribe to them and you are able to decide. If you go to most of the newspapers, you will always get the pricing and the pricing of these shares, and you can actually see how far they have been trading or how far they have come over the last 12 months. Then you ask yourself, from a trend analysis, do I expect this to continue going up? That's one of the ways that you need to decide how you buy shares. The other one is just looking at the dividend and say, for me, cash flow is important. So there are companies that are very good in terms of dividends. Look at the ones that are giving a good dividend, and then those are the ones you buy. The other way to determine what stocks to buy would include maybe just at hot tip. Maybe someone tells you this is what is happening in an organization, that we expect the prospects to go up, and then maybe you decide that is what you're going to buy into. Maybe the other way is just the product that we consume. I remember I started by asking, do you know that you can be a part owner? So maybe you like the service that you get at ABSA. Maybe that is just to show you what is happening there. So what then it means is that you can actually be able to buy that share and be part of the profit that comes in. So buying the shares is an easy process, but buying the right share is where the trick is. So for you to determine which is the right share to buy and how long am I going to hold on to this share is key. As you get into the stock market, one other thing that we need to understand is that there is no quick money in the stock market. You have to be able to buy a share and to wait it on for 10 years. Warren Buffett said, if you don't see yourself holding a stock for 10 years, don't hold it even for 1 minute. So make sure that the prospect of the company that you're buying, you like, and you can wait it on, so that at the end of it, because the prices are volatile, if it comes down, you still like the company. If the company was to be delisted or stop selling in the stock market, you'll still like the stock. So that is one of the things that we need to think about when you're buying shares. One of the key mistakes that we see oftenly as investors go through the stock market investment, one of them is following the herd or following what people are saying. Please do your work. Yes, someone else could have made money, but maybe this is the time they have already made money. The share price has grown from 1 shilling maybe to 10 shillings, but maybe it's fully priced. So it is good for you to know, where am I buying this stock? Do your own work. Remember also, on that note, you can have a very good company, but the stock is fully priced. So the stock as an investment is not a good investment. So that doesn't mean that the company is bad, but it just means that the people have overbought it. So it means that the price is pretty high. So that is one of the mistakes that we always make. The other one is constant trading. Remember, every time you do a transaction, you're buying or selling a share, there is the brokerage fee, and all that transaction cost come into about 2.5%. With that amount of transactional cost, it means that if you continue buying and selling many times, you can actually lose money. So anytime you're buying, remember that on one side, there is 5%, 2.5% that goes to the whole transaction, and as you sell, the same thing. So as you even get advice, always know that, yes, my total return ought to be higher by at least 5%. Then the other thing is taking short-term investment, short-term goals, money, and investing in the stock market. You can never determine where the stock market is going to go. So if you're taking your kids' school fees and investing in the stock market, the probability is that if the stock market goes down, you could actually have some problems because you might not be able to actually exit that part. So how then with all this jargon, with all these conversations that always go on, the key is to spend time, understand, select your broker, someone who is going to help you understand and walk that journey, because it's a long-term journey. And then now from there, you can actually start the investment process. One last thing, as we discuss about equities, maybe you do not have time to do the security selection. And the security selection is to decide, I'm going to buy in these bonds, in this bank, I'm going to buy these equities. What you could actually select is go through the unit trusts. There are funds that issue equity funds, and those would be maybe something you need to look at and say, do I believe in what they have been doing? Look at the track record, and then just buy units into it. That way, you reduce the headache of you having to track this investment one-on-one. So again, the process is clear. Go directly through the broker or through the unit trust, and the process is clear and very easy. But do not invest in that which you do not understand. Ask the right questions so that you can be able to select the right investment security for you and for the season that you are in. Again, thank you so much. Continue watching, and in case of any questions, always follow us on our socials. We'll be happy to continue educating you. Thank you.
Learn, grow, prosper with Zurit.